Have you heard about the country that uses Bitcoin as its main source of currency? El Salvador is a relatively small country in Central America, and it was relatively unknown until a few years ago. It's known for coffee, not winning AP Olympic medal, and being an episode archer. Was the race founded in Guatemala? They never really followed up on that. Anyway, we may soon be able to write off all of this because El Salvador just made headlines for adopting Bitcoin as their official currency. What had been two countries is now one. This is promising for cryptocurrencies. El Salvador, however, might not be the best test case for all of these reasons. We explore the issues around this topic in this video, not least of which are the country's precarious financial situation and effectiveness. Nevertheless, with the chance to be the first country to adopt what many are already calling the economy of the future, all our lives will be on this tiny little nation and maybe even some feet as well. Before this video starts, make sure to like and subscribe for more content like this. El Salvador has a way to make Bitcoin holders citizens of their country. That's because the government wants people with a lot of Bitcoins to be able to live in their country. Despite this sounding like a promotion for Bitcoin, the offer only applies if you have 3 Bitcoins or less. The several hundred billion market for the virtual currency didn't really react that much to the news. This is an interesting relationship between the country El Salvador and the crypto market. To understand why this situation might happen, it would be good to understand why El Salvador's government would make such a decision first. For example, are there other issues that are facing the people of that country? Why didn't the Bitcoin price jump more significantly after this announcement? He touched on a lot of pertinent points. It's worth noting that some economists are worried about inflation in other countries. Is that what gives this increased buy? We can put El Salvador on the Economics Explained National Leader Output Leaderboard over on our second channel. So to clarify, El Salvador is not getting rid of their own currency by adopting Bitcoin. They do already have one and it will continue to exist. That doesn't mean Bitcoin isn't valuable for the country. It's the old Salvadoran and colon currency, but since 2001 it's never been used instead of American dollars. When the government first accepted the dollar, they actually granted an exchange rate of 18.7, meaning that if you traded $1 for 8.75s, they would honor that agreement, still in place today. So if you still have any old notes lying around, the time is now to cash them in. With currency taking on the value of various other national currencies, it's nothing new. We've seen this happen all over Africa and South America. Look at Zimbabwe, Somalia, and in Venezuela for evidence. All countries that were almost forced into using it because their own currency became practically worthless due to hyperinflation. El Salvador was a little different, though. It wasn't forced to adopt the dollar, but why would they? They chose for themselves, and we can't complain about that. With the advantage of being affordably priced, El Salvador can bank on their stability as a small nation. The United States spent $877 million in 2020 printing, transporting, and securing their cash to the Federal Reserve. That's a small amount, but you know El Salvador. They have a GDP of $27 billion, and that seems to be the main reason. Of course, it still makes the country more attractive for foreign investment, which is what really matters. The risks of investing are important, and sometimes people overlook the risks that cause you to lose cash. For example, when you invest overseas, the US dollar may weaken against another currency. So, even though your assets have gone up within those other currencies because of a gain, it won't translate into a gain for you if the US dollar drops. If you invested $1,000 into a company in Brazil back in 2011 and they saw their stock price increase 300% over the next 10 years, it looks like you would be pretty happy with that kind of return. But think about GME and Dogecoin. People who invest money there might not think the same things as you do. But anyway, back in my day, 300% returns in 10 years would have been pretty good, but our investor would be disappointed to find out that during that time the Brazilian real lost 2/3 of its value. It's a shame their brilliant investment plan didn't work out. It is important for investors to understand that different investments carry different levels of foreign exchange risk, which an investor can otherwise manage. Foreign currency futures, for example, are not always a cheap way to minimize this risk and are only available to institutional investors. Doing business in one single currency makes it cheaper and not having to deal with foreign exchange fees. Furthermore, if you have money in a foreign bank account, exchanging money can take a long time and cost steep fees. And there's lots of reasons why investors might not want to get involved in some countries. So was this dollarization scheme successful in attracting foreign investments? Not really. In El Salvador, crime and corruption were rampant, which made the country unattractive for investment regardless of the type of currency used. Despite not receiving much in the way of funding, the dollarization initiative did start to cause some other more serious issues. El Salvador is a very small country with lots of people, so this had some bad effects for us. It means that, over the course of a year, it needs to import more goods and services than it exports. This is called a balance of trade deficit, and it's not actually a big deal. The countries with the record-breaking economies also have the greatest yearly trade deficits, but any small country with a trade deficit will struggle with what they owe and what they're owed. Since El Salvador can't legally print American dollars themselves, their own money is only worth as long as America grants them permission. This means that in some cases it may be better to buy from other places than what El Salvador offers, because even though you're being friendly to the country, America will be likely to take its belongings away. Eventually, it will run out of money just like any other person would. If you spend more than you make now, of course, this has never happened, and the money supply within the country has been growing for the past 2 decades. And it's not even attracting investments to top up these supplies. So what gives? Well, you see, the nation is one of the largest foreign workforces in the world. Every month, the system of sending money back to El Salvadorian families and workers is proving to be super helpful, with millions of dollars in the form of remittances sent from international work grounds. Obviously, this means that people who are abroad can send bits of their loots back home, also known as remittances. This is an ongoing process, and there's still a lot of work to do. For example, since the pandemic, foreign transaction fees have been draining your income and sending it back home. This can be simplified, but most people on low income levels in the USA and Brazil, or El Salvador, as they're officially known, will tend to make small transactions. Seems generalizing, but it's true for most. It's not unrealistic to assume that El Salvador might be the first country in the world to meme its way into prosperity. Will this work? Who knows, probably not. Chances are, though, if it does happen, then the news will probably be gone in a few weeks. And nobody is going to want to move to a place that is notoriously violent. Plus, people who own bitcoins are most likely hurting right now. Realistically, the market knows this, and that's why the price of Bitcoin has been down. That's not great, but there are still some important lessons to be learned. Inflation has been a hot topic lately. A common mistake I see is people think that inflation means their hard-earned money becomes less. Inflation actually refers to the rising prices of goods and services. So if you want more info, go check out that link I posted there. It's understandable that inflation might be confusing, considering that it involves money. But 99% of the time, you can do a simple calculation to figure out how much your savings are really worth. But it will limit your understanding of the issue as an economist. There's a good case for this in El Salvador. Generally, inflation is associated with the value of currency, and so you would think that the US and El Salvador, using the same currency, would have similar rates of inflation. This article mentions that the inflation in El Salvador has been noticeably lower than the US for a while now. To begin to understand inflation, you need to first be aware of the rise in general goods and services. Even though you might not walk away with a new Bitcoin economy, hopefully you walked away with a better understanding of inflation and how to avoid it. If you enjoyed today's video and would like to see similar videos, click on this video to the right. Or maybe this video to the left might be more interesting to you. Hope to see you all in the next video. Take care and remember, stay informed, stay prepared.